Hello all. Today is Thursday, December 10th, and I'm Michael Boutros. Good to be with you guys here this morning for this live intraday strategy webinar on SB Trade Desk. Minho, great to see you. Permendra, Eileen, again, wish you the best heading to the end of the month. Chris, good morning. Hussein, Kyle, Mario, the whole group is here. Good to see you guys. So, where shall we begin? Looking at the dollar index really quick, we obviously got the BOE interest rate decision this morning. The vote count stayed at 8-1. So we were essentially looking to see if there's going to be a growing dissenters within the MPC calling for more normalization of policy. We got a similar 8-1 vote. So it's not really going to be a major market mover. You did see the sterling make a move. We'll go over that. And also the Aussie numbers last night, really strong Aussie employment numbers, giving lift some of the Aussie pairs. We'll go over that as well. Okay, as always, guys, feel free to throw out any questions or trade setups as we go through this. And let's just jump right in. So the dollar index, before we get started, biggest performer on the session, biggest or strongest performer is the Aussie, up 0.84%. Kiwi up about half a percentage, or half of a percent. CAD up 0.13. Biggest losers are still going to be the Euro block. Okay, so it's interesting to see some of those come off. We'll talk about the Euro setup. Looks very clean. I still like the long side there, coming into some support. British pound also rebounding off of his support. Swing trades are long on that, triggered overnight. So we'll go over that as well. So heading into the end of the week, the biggest event risk, or the only event risk essentially left, will be tomorrow retail sales data from the United States. You also get the University of Michigan preliminary numbers for November. So those will be out on tap tomorrow. Dollar index on the back of this is coming off of a very interesting slope support, and it stopped right at resistance. So guys, we talked about this yesterday, the lower median line parallel. It came dead on with the 100-day moving average, 12,040. Today's low, 12,040 on the mark. Okay, we're looking right back at that reversal day close, offering some resistance right now. If we see a pop through here, I really still wouldn't get too concerned. As long as you stay below, instead of 12,123, which was our bearish validation yesterday, we're going to lower that down to the confluence region here for today's close and tomorrow, basically at the October highs. So about 12,110, 12,109. The October high, and then this confluence region right here. All right. Below the low that we made in overnight, you do have that 12,032 618 extension. Wouldn't put too much emphasis on it unless it's at the confluence region here, but I think that'll open up the way for further decline here in the dollar. Again, a nice gauge of base dollar movements, right? Here's what the dollar looks like on the 30-minute. Oh, and here's Aussie yen, did hold that resistance last night. Interesting. Dollar index looks like this. So there's your start of the week. You press into a Monday, Tuesday high. This was a big pivot, 12,123. We were talking about this for the last couple of weeks, if you guys remember. And it was also coinciding, we highlighted this, with that median line off the highs. Break below that, you're looking for a weekly opening range break to validate. Boom. 12,071, lower median line parallel, a basic 50% retracement. And you could see a little bit more of a near-term rebound here. So again, long bias, or the short bias, remains in play sub 12,010, 12,009 right here. 12,109, 12,110, excuse me, guys, right here. And we'd be looking for short triggers to break the lows here. Looking for targets at 12,021 and 1193. That's a 618, might be a little bit bigger of a deal. So heading into tomorrow's retail sales data, I got a nice picture here. As we noted, it seems like the consensus right now is that we're going to see an interest rate hike. We're not going to sit here and try to guess whether it is or not. At this point, the dollar looks like it's giving up some of its steam here. So that is the dollar index. Any questions on this before we move into any of the dollar crosses? Most of the pairs we've been covering, we're back on the dollar crosses again. Excuse me. All right. So first thing from yesterday was the euro dollar. And let's start with the daily. So we came into a region of really critical resistance, and although we overshot it, this region here, we talked about it yesterday, you had a lot to look at, right? You had the 50% retracement of the entire decline off the highs from October. You had the 200-day moving average, the 100-day moving average, and former trendline support, now resistance. Like I said, we did pop through and push and even close above that 50% retracement. But I noted yesterday this. You see this interesting momentum? You give more credence to a momentum that has this many tags, or a support that has this many tags and momentum. So once, twice, 3 times, 4 times, 5 times, break. We were testing it as resistance yesterday as we came into that region. So you've had a big stretch. You've covered the entire November range with just the first 8 days of trade for the month. So you expect to see that you can get a little bit more of a pullback. Still, as long as we hold above that median line on the close, we'll continue to favor the long side. And it's basically like 109.40. So we came into that an overnight trade. Here's the 30-minute looks like. Here's what it looked like last night. Okay. Near term, we're looking for that Friday high to keep this thing afloat. You also have basic trendline support off the lows. You can see that caught it almost to the pip. And while we did sink a little bit below, we had given it in 109.40, 109.50 range, I think is what I noted on there. Yeah, 109.40, 109.50. So we bottomed out right at 109.34. Long positions are on. We're looking for a rally back to the upside. So at this point, you'd look right back up to that 50%, 110.05, and we have to be, I'm not really big on trading moving averages, guys, but we have to be cognizant when it's the longer term moving averages that everyone's looking at. So the 100 and 200-day moving averages, I have them labeled here. They are on tap. We rebounded off of one yesterday. That was the 200. The 100 is just a bit higher at 110.60. And then you've got a 618 extension off the low at 110.80. So essentially, it's every 20 pips up beyond 110.20. It's pretty tight. I completely understand that. So you're not going to want to scalp between these. Rather, if you're holding a position, as you get each of these targets, maybe peel off a little bit more of the trade, bring your stop higher, peel some more off, bring the stop higher, etc. A little bit of a mess here. It's going to be hard to actually scalp these regions, but once we pop through that, I think Euro has plenty of room. You're looking at 1120. It's just the first 618 retracement of decline. And key resistance takes you up beyond 112. Okay, first things first, I'm not going to start going for a trade targeting that high yet, but just to show you the potential of the region that we are testing here in the Euro. And don't forget, this is coming off of a multi-year trendline support. Okay, so for people who think that 112, 113 is like crazy insane, just looking at where we're coming from, wouldn't be too surprised. Now, inevitably, I do think Euro is going to turn over in the longer term, but near term, the risk is still there to the upside. So, from the scalp bias, nice description of what happened, right? Now what are we doing from here on out? Here's what the scalp bias looks like. So again, we're holding longs against the low. If that breaks and we get stopped out, it's not a big deal. We'll be looking for entry now down near 108.90. And again, that's the opening range high for the week, the initial opening range. So if that gives out, we're going to go ahead and sit on the sidelines. We'll look for a break below 107.50 to validate the broader resumption of the downtrend. Okay, because always keep in mind where we are. If this is a false break above this upper median line parallel, a break below that 108.90 barrier would really be the validation for a broader turnaround here in the Euro. Does that make sense? So let's see if she holds. And that is euro dollar. Okay, next up was the British pound. Here's what sterling looks like. I put a piece on this out on Daily FX as well. It's been a while since we really focused on the sterling itself. If you've noticed, we've been talking about sterling key lately, even sterling Oz. There's been a couple of you guys that are asking about analysis for sterling Oz, which we've covered. But sterling dollar, for me, I kind of just wanted to see the sidelines, see how the opening for the month looked. And there's a couple of factors that I'm looking at right now that really think or suggest that this thing could really make a higher move. I know seasonalities heading into the end of the month here are typically not that strong for the dollar. So again, that would help us fuel further topside break. Never want to try to call the break before it happens, but here's what we're looking at. The fact that the pullback here turned around just 10 pips, I think. What was the close here? 49. The low was 55. So 6 pips off the low day close. So the December 2nd low day close for the month turned right ahead of that. The rally ripped right through the weekly, here's the weekly, and the monthly opening range highs yesterday. Okay, so near-term resistance or key resistance is that same slope that we've talked about in this webinar, on these webinars for months, right? I showed you guys this before. So that comes right in line with a basic median line off the low, so basic parallel, the 100% extension of the advance. So even if it is correctionary, this would be the first area to look for resistance. And they all confluence right there around 52.20, basically into like 52.40, 52.50. So that would be the first area I'd be looking for resistance on sterling, looking for a pullback to get back on the long side, what we noted last night. Here's what it looks like now. So we were looking for, and if you read the notes, I said I still think we could get a stretch right into that resistance barrier. We didn't actually hit the resistance barrier before I published this. The high was just pips off that major key region between 51.99, essentially 52, and 52.18. So we did inevitably get another stretch into it early in European trade, and we went literally into 52.01, I think was the high. And then we turned around. There's that support structure that we need to see hold near term. So as long as we hold above 151.13 into 151.18, 151.13, by the way, guys, just being the objective weekly opening range high. 151.18 is a 618 extension of the advance off that low from last week. So a nice confluence region here, that 100% extension and the 50. Nice confluence region of fibs. Current operative structure also runs right through that. Here's the median line we just broke out of, and this is the support we want to see hold. So it's very clean, exceptionally clean finally here. After a whole bunch of dilly-dallying around, sterling's finally starting to give us some structural plays. So we'll look for support while above this. Again, our bias is weighted to the upside above 51.13, 51.18. I'll break essentially below 50.50 is really, I wouldn't even say that. If we break below 51, guys, this is what I would say. We could probably get some short scalps into this region. 59 or 49.50, excuse me, is going to be the major key region of support. And again, that's just the low day close. So remain constructive while within this channel formation. That's really what would be needed to break us a little bit more, with a little bit more conviction, let's say, for a turnaround in the sterling. That being said, looking higher from here. Craig, we'll definitely take a look at Kiwi. Let me jot that down. Haven't been too crazy about it, but we'll take a look at Kiwi for sure. Any questions on the pound? A little bit more of an expensive hold cost, but I think it's worth it here. The levels are starting to look real nice. You do have the Fed on tap next week, so I don't think you're going to see any major loading up on dollars, which is what a short sterling would be. So I think We'll continue to look for this to travel higher, or looking for a pullback to get long, rather. All right. If there are no other questions on that, sterling dollar, euro dollar. Okay, let's jump into the radar charts from last night. So, first things first, dollar yen. Uh, I was kind of really impressed to see that same median line hold. I don't know if you guys caught that. Some slopes never change. Here's what it looks like. So on the daily, we've done some considerable damage here, but I want to show you this first. So that break, all the levels are redone, first of all, from what we were looking at earlier in the week. So if you're looking at it earlier, I think yesterday in the webinar, I'm not sure if I still have it here. Right, we were looking at this. And this consolidation region here was so big, especially that former median line support. And we even did have a pause there on the decline. But you're looking at basic support from the start or mid-November all the way to the lows that we just made. And we tried to make it back up into resistance, failed. This thing cracked right through the lows, made a 1618 extension, and went for a perfect tag of this longer dated. And if we take these three reference points and take these three reference points, they both turn out being the same exact slope. So really a lot of conviction, at least for near-term price action, that we've been following this gradient lower, which means 121.83 resistance, key resistance into 122. That would be where the median lines are converging at this point. The only thing that would shift you back to the upside would be a break above 22.25, 22.28 right here. And that's the series of lows that we made all throughout November and even into the December opening range. So while in this region, you have to look lower, bottom line. Downside targets, the 200% extension, we measured this yesterday in the webinar of the advance. So if this is going to be called a double or triple top, whatever you want to call it, a conservative measure of that move takes you to 2091. That also lines up very nicely with 120.89, which is the 50% retracement off the lows from October. So the abomination, as much as it is again also starting to give us some structure here. Any questions on this? We got the BOJ on tap next week and the Fed. So double whammy for dollar yen is likely to be a very interesting week. Okay, so sell rally. My notes from last night. Sell rallies sub 22.25, and watch for that confluence median line structure. Again, for anyone who's new to the room, if you ever need to take any screenshots of any of the charts that you see posted, there's a camera button in the top right-hand corner. Feel free just to do that if you want any of these charts for future reference. This one is on the radar charts, though. All right. After dollar yen, next up on tap yesterday was the euro Aussie. Looking for a turn here, and one of the main things that I was looking at is that turn in momentum is pretty convincing. Now we're dilly-dallying right here, right now. I don't know if we can validate the break, but here's what Euro Aussie looks like. First on the daily. Oop. Sorry, Gary. On which chart would you want on that? Dollar yen? Gotcha. You want to take a snapshot. Okay, and this is off the low from October 15th. Okay, so Euro Aussie says perfect. Thanks. You're more than welcome, Gary. Anytime, man. Euro Aussie looks like this. And again, we were looking for this this break here to the downside. Here's what the daily chart looks like. First of all, you came right into the 50% retracement. Momentum failed. There wasn't much of a conviction turn in the daily as much as there was the near-term 30-minute chart. But I do want to point out one thing. Remember this old guy? This old geezer from way back in 2014, which gave us some really nice pivots, caught the lows, pivot, caught the lows almost, and it was the pivot break that essentially launched us into the highs. That same upper median line parallel right there. Right there. So after a stretch to this side, sure, might be in for a near-term pullback. Here's what the Euro Aussie looked like on the intraday. If you take an extension off the highs, off the lows rather, if you remember earlier in the week, the report, and by the way, for anyone who's new, again, just a quick reminder, any reports that I've written on the radar charts previous, you'll see those as hyperlinks. So on the Euro Yen, if you click on that hyperlink, it's going to take you to the previous Euro Aus update, whenever that was. So here's what we were looking at earlier in the week, as this thing was coming to that 618 extension. We were actually looking for a short exposure and a break. We got one last break and a tag of that key 50% before turning right back below. So right now we're trying to validate if this is going to be rejected. We would want to see resistance hold along that former channel support and a break, again, of the initial Friday highs, the weekly opening range highs, would shift the focus down back to the downside. Be a counter trend trade. Keep that in mind. The broader focus still remains higher, but if we just zoom this out, multi-month channel formation wouldn't be outside the realm of possibility to break, check as support, and then move off, which is why I don't want to get so aggressive on just trying to play the longs from here. You know, you came, you made a 50% retracement of the entire decline. Wouldn't be surprised if this holds below, like I said, that median line to look for short scalps sub 51.50. Also note momentum on the entire way up, divergence, higher high in price, divergence, higher high in price. Okay. We held 40 since last Friday. 40 support, turn ahead of 40. It's your first 40 break of the week. Now here you are putting in some divergence. So you could see this thing pop higher, but sub 51.50, sub 51.40, you want to be cautious looking lower in Euro Aus. Any questions on this pair? Much wider range. 47 pips is a quarter of daily ATR, so you do have a little bit more forgiveness as far as putting your stops out there. But a very contentious break. I would have liked to see that break sub 50. What was that, 50.19? I would have liked to see that break give us a little bit more of a downside play there. But we'll see what the U.S. opening range looks like. Any questions on sterling dollar? Okay, next up on tap from the radar charts is the Aussie dollar. And then we'll jump into your questions. Thoughts on Kiwi, Craig? I think I already told you. There was another question here on, who asked it? On crude. Yeah, sure. We'll take a look at crude. A lot of headlines these days about it, right? Okay, first things first. Here's what the Aussie looks like. Employment data, much stronger than expected. There was a lot of concern that you would see that number really give this thing a knock on the head because we already know that the RBA seems poised to be able to ease more if they need to, but the employment figures were pretty strong. You got a print of 71.4 thousand. We were expecting a drawdown of 10,000. Unemployment was expected to tick up from 5.9% to 6%, actually tick down to 5.8%. And that's not even it. You know, most of the gains that you saw last month did come by way of full-time employment. So you did get some 30,000 almost part-time employment, but you got 41,000 full-time employment positions. So not that bad of a deal. Participation rate even upticked from 65.0 to 65.3. There's a just good overall all-around print. So what does that mean for monetary policy from the RBA? Well, definitely is going to thwart some of those expectations that they're going to be so aggressive to ease further. In fact, if you look at Credit Suisse overnight swaps now, it looks like they're only factoring in a 11% chance that the RBA will cut the interest rates or cut 25 basis point at the next meeting. That is to say that some of that pressure holding down the Aussie has had to do with the fact that there were expectations that we would definitely see further cuts. Might not be the case here. Avery, yes, we will look at that for sure. Sterling yen and euro yen. Just let me jot that down. Euro yen. Okay, remind me if I forget. But with regards to the Aussie dollar, here's what the daily looked like. And again, very clean on the daily chart. So we were within the confines of this ascending formation. Look where we bottomed. Look where we bottomed yesterday. 71, 77, 72, the bullish invalidation level. Momentum turned ahead of 50. The rally halting right at the upper or the median line off the lows. So super clean, super clean. I still think above this region, you really can't get bearish on Aussie, especially with what's going on right now. Immediate resistance has been hit. So sure, we could get a drawback, but here's what it looks like. On the 30-minute. Sorry about that. All we've done, essentially, is make a massive weekly range. Here's your open, all the way into trendline support. You did get some messiness down there, but all the way up, failure ahead of, opening range high. And here we are, right, almost mid-range. You're still holding within the confines of this nice ascending formation off the lows. I didn't have this as a featured scalp, as I just had it as a radar because I don't know if the consolidation here is going to break lower and then we look to buy off this region, or if it breaks above that 618 preferred, look to play a pullback and then longs back through the highs here. And this is a big region of resistance. You also have the highs from October, but more importantly, it's a 50% retracement that dates all the way back to the highs from June. Okay, so you have a lot up here to contend with. Long story short, looking to buy rallies essentially while above 72.27. So if we do see a downside break of this consolidation near term, you might actually even get some opportunities to take some short scalps. But more importantly, broadly speaking, I'd be looking to buy closer to here. If the opening range for US just gives out to the upside, look for a pullback again to buy against that pivot, looking higher towards 73.38, 73.60, and of course the confluence region. So levels are pretty good after a stretch like that. Honestly, yesterday on this, I was wishing that we would get a test of this median line, which came in real close with the weekly opening range high. Just didn't have the guts to pull the trigger, as it kind of failed right ahead of it, but that would have been a really nice play also. So long story short, looking to buy pullbacks in Aussie dollar while above 72.27. Any questions on the Aussie? So those are the radar charts and the featured setups from yesterday. Again, my favorite pairs are definitely the Euro and Sterling still at this point. Aussie, I do want to get involved with. I just want to see a trigger here that's a convincing one. So let's see what the US Open looks like. Aussie Kiwi, Munho. You know what? Let's just do that right now since we're right in the Aussie. This is what Aussie Kiwi looks like. We've obviously been tracking this one for a couple of weeks as well. And on the back of yesterday's complete breakdown, came into a nice area of support. Again, I'll bring your attention to that same slope. Unbelievable, this pair. The slope is just ridiculous. So here we are again on a closed basis. Again, on a closed basis, we're stressing here. We tagged the 618, nice rebound, former median line resistance, again, capping the advance. Here's what it looks like on the intraday. I know this chart looks really messy. Let me just zoom in for you. Adjust some of these levels. So the targets have been hit except, what was the next downside? I think that was the last target that we noted on the report, 107.22. Okay, I would look for soft support near 106.46 if we break to the downside. I don't really have many targets on the scalp beyond 107.20. That was the last target that we had sort of mapped out for you in that scalp report earlier in the week. Yeah, I would just bring up 106.47 here or so. 106.50 is a soft target. So the rebound likely has a little bit more to go as far as juice to the upside, I think, but you look to sell rallies well below 108.60. And that's not only the 38.2, don't mind that, but it's also basically the weekly opening range low, essentially where we opened the week. Open was 108.64, so pretty darn close. Pretty darn close. And you know what? Bear with me, guys. Let's see if we need to alter any of these levels, because we do have some more structure to the decline here. First, let's just tack on a quick extension. Nope. Okay, so if we do a basic retracement, that same advance, 38.2 lines up a little bit cleaner. Okay, not bad. All right. Sorry for the silence. Sorry for that, guys. This just going off the fly here. This is probably like the new amended levels I'd be using for Aussie Key. You've seen a pretty certain rejection here in momentum. If you look at this, it looks like it might pop through. I'm looking here. If we find support at 40 and it does finally make it through that resistance trend line, which I'm kind of just visualizing in my head, but I haven't even drawn yet. If we see a topside break above this, I would be looking for a recovery, but I still want to sell that. You know, the basic premise of this entire trade, guys, was that longer term median line that we were following just in the daily chart that we just looked at. This. So the whole premise of the trade is that we came off that. We even got a false break above it. Nice head and shoulders formation. Break to the downside. We've already hit the objective target from that. So the question becomes, does the rebound take us all the way back up into the upper median line parallel, or does it break down? I don't know. I'd want to put the bearish invalidation level right here at this point. If you're breaking back above the median line, back above the 50% retracement, you're probably going to see a probe back up into the upper median line. So I don't have any plays from right here, Minho. Does that help? Let me know. If you have any questions here on Aussie Key, we put out a piece on this on Monday. Definitely have to revamp some of those levels. So take a snapshot of this, Minho, if you're trading it. I do think you can make some more sideways movements here before you break down further. This is a near-term support and the objective run there off the highs. So just keep that in mind. He says, yeah, I still have some short from the right top, right on. Right on. So if that's, yeah, I mean, depending how you're playing it, if you're looking for a longer term position, just know that you're coming into the first initial major region of support. And the only thing, again, I'm going to keep stressing it, is just because we've seen so many major turns along this slope. Okay, it's all the same slope. And that's what we just rebounded off of. So I would say as long as you stay below but like that median line, 200-day moving average, should be good to go. And sterling yen, who had a question on sterling yen. Oh, well, let me get your question first. Was it Craig on the Kiwi? Here's what Kiwi looks like. Here's what I can tell you. I do like the Kiwi higher, but not from these levels. I would need a pullback. This was a nice outside day. Really nice tag of confluence support, nice pivot in price, and just basic trendline support, which is a slope of the same exact operative slope that we were in. You can see we're finding resistance there right now. I kind of would like a pullback into like, I want to say like early 66, 66.50, 66.60 to play the longs. If this is a breakout. And again, here's what the intraday chart looks like. Just as a disclaimer, real quick, Craig, I haven't traded Kiwi in quite many weeks in general, but here are what the scalp levels look like. Basic retracement off the low. You had a longer dated extension off the high, which also gave us some very clean pivots. And that would bring you basically constructive above this 66.60. There it is. I knew there's a reason I like that level. Because at its face value, guys, all it's made is opening range. We tested the highs. You failed a break of the opening range, and then you push through again, but you're at resistance. So an opening range break to the upside is not going to do us any help if we're at resistance, because nothing supersedes support and resistance, right? If it's a long trigger in momentum and it's a long break or it's a break of a resistance level and you want to jump into the position, doesn't matter if there's resistance just a couple pips away. So I still be looking at 67.78, 67.85. Nice confluence of the 1618 extension off the low and a broader 764 retracement off the high. Really nice confluence region. It caught the advance perfectly last week. So the levels are pretty clear. Craig, I would treat this as a range, man, until we have something to validate otherwise. But broadly speaking, I am looking for a little bit more of a corrective move higher. Just need to get through this 60 region of momentum to validate it. Keep in mind, a really nice confluence region is the highs that we made back in October. It's not too far off that 200-day moving average. Craig says, thanks, Michael. I took a snapshot. Yeah, I hope that helps, man. I wish I had a little bit more conviction on this one, but I think we'll have to be a little bit more patient. Hey, Eileen, I appreciate that, and wish you the best on your trip as well. Be safe, and happy holidays. Gary says, going quickly back to the dollar yen. Sure, Gary. ask opinion on, can I just ask your opinion looking at the monthly chart? It seems that RSI is coming back from oversold, 70. Would you consider this a possible sign of a top in the pair and maybe first quarter weakness going into 2016? Your thoughts are always greatly appreciated. Hey, Gary, appreciate that. Let's take a look, man. Never hurts. Dollar yen. The month is going to look pretty ugly on my chart, so why don't we bring up a naked chart here and let's just take a look at it. Yeah, sure can. Sure can. Not only that, you're getting divergence. You got divergence into the highs, right? Let me just delete all these previous. Okay, so you can see that we're making some divergence into the highs, and then we're breaking back below 70. Absolutely. Here's the thing I just want to explain to you. Who asked this question? Gary. RSI is a lagging indicator at best. All oscillators are a lagging indicator, but RSI is a lagging indicator. And when you take it on such a wider, grander scale on this as the monthly, I tend to put very little emphasis on something like a trigger per se, because you can't make any assumptions until the monthly candle closes. Remember, the farther out you go, the less this is reactive to what's happening in the near-term price action, because this only gets pegged to a specific area once the candle closes. So as long as we're in the December candle, I don't know where this really is. We could close December 100 pips higher, and this will be right through 75. You won't even know what happened. So I don't put any emphasis on an intra-month RSI trigger, RSI breakdown. If anything, it would have been like August to try to start playing the shorts. But right now, I can't make any assumptions here for this until the monthly candle closes. So you got to understand how the indicators work so we don't make mistakes like this. I can't, use any type of operable trigger on a monthly candle. I can still look at what the broader momentum signature is doing. Sure. Coming back from oversold, overbought condition. Sure. Could we get some more weakness? Absolutely. Is it something that'll necessarily be something I can operate off of? That's hard. What I can tell you is this: if we look at the, I think I have a weekly chart of dollar yen. Yes. If we look at the weekly chart of dollar yen, okay, this is just a simple chart, just showing some basic trend lines. That's it. We were in this pitchfork for a good 2 years. You can see the median line was a perfect pivot. We broke out of this earlier this year, checked former median line support as resistance, and now we're checking the 52-week and 13-week, so quarterly and yearly moving averages just lower. Okay, this showing the same thing, but it's going to be a little bit more near term, right? So price action making a higher high, the oscillator making lower highs. And broadly speaking, yeah, you're at support. You're at near-term support. But you're within this longer, broader descending formation. Okay, and you turned right ahead of downtrend resistance. And you responded to downtrend support. Right? So there could be something brewer here for a much larger dollar pullback. I think this is one of those trades, guys. You got to be really steadfast. You got to use your patience on this one. There's a reason I call it the abomination, because people look at these grander scales that kind of fall in love with a bias, and then they get wiped out because the washouts on dollar yen are notorious, really strong. So just keep that in mind. Hope that helps, Gary. He says, yeah, rock in a hard place, right? Yeah. Um, but here's what the daily looks like from a more near-term perspective, Gary, which is my specialty. You've made a basic and simple weekly and monthly, for that matter, opening range break to the downside, taking you below support. So 122 resistance is still going to be sort of the game plan. And I'd still be looking for that, drop down into essentially last month's open, which is right here at a nice confluence. Trendline support, former resistance. That's your level. Make sense? Gary says, thank you very much. You reassure me greatly with your analysis. I appreciate that, Gary, and I hope it helps, man. Definitely something we'll be tracking, especially heading into next week, okay, with the BOJ coming right after NFP, right after the FOMC. So it's going to be a double whammy next week for the yen crosses and dollar. Exciting stuff. Good way to end of the year. So we will see. Why not fork yet on daily dollar yen? We could. I just try not to put too much on the daily charts to make them too cluttered. Mark, you know what I mean? So I try to keep the charts that are there just to show the broader. I keep the longer term pitchforks to just show the broader trend that we're in. But all I want to map out on the daily is just like the key levels. He says, yes, I understand. Sorry, guys, I'm all tongue twisted today. Can't get my words out. Must be heading towards the end of the week. All right, so that is dollar yen. And certainly, like I said, we'll be a big player. We'll be looking to sell rally sub 122.25. That's going to be a big region. We'll see if that median line holds. So euro yen, someone asked about euro yen as well. Here's what that looks like on the daily. Checking support today. We've talked about this level, 132.81. Last month's open. And we even issued a short trigger on this last week. If you remember, we turned our buys to the downside after this candle here in the 4th, went right into a three-way confluence with the 618 extension off the September high, the upper median line parallel for the formation off the yearly highs, and the 100-day moving average, all which confluenced right up there. If you notice, the 200-day held us on the close here every single time. Bring it into a line chart, you can see how much precision the 200-day moving average has offered pivots in the pair, right? So with that said, we did look for a move lower. That move lower, now coming into near-term support. Still the bigger support is going to be that median line, but certainly the November open being checked here. Here's what euro yen looks like on the near term. Who was this question for? Avery, right? So, if I recall, we did cover this one. I'm not sure if it was yesterday, but we were talking about the fact that this thing is just in consolidation below resistance. I don't know what it's going to do. Could break to the top side. You look for the 100-day moving average. You look for that 135.18 handle. Big resistance we just talked about on the daily chart. A break to the downside. You'd look for a little bit more of a correction with the 50% retracement lining up pretty nicely with those previous weekly highs that we made there, as well as that November low, the close low. In any event, we broke the weekly opening range here just now. I wouldn't be looking to do anything from here. If we can sell a rally, that might be nice, trying to move it a little bit lower. On the real near term, you probably could work with something like this. Okay, and I'm just going off the cuff here, but you get the picture. So you could see a little bit more of a rebound. Check the underbelly of the opening range for the week. And bear with me. See if we can put something together here for Avery. I just want to see what this extension looks like. Bear with me one moment. Aha, 100% extension off the highs. Nice. Ooh, and the 1618 is dead on with the 50, even nicer. Okay, not a bad setup. So, bearish sub 134.08, essentially, opening range high, a nice confluence region of Fibonacci levels. Again, the daily chart, we talked about it, huge, huge, huge region. So bearish below this region here. Near-term support, I still be mindful of 132.70, so I'd be watching this for near-term support. But a break below, and you got a clear-cut run into the 132 handle. Okay, it's about like 50 pips or so. Remember, quarter of daily TR is only 27 pips. So as you get 27 pips, maybe bring some down, take some off the table, etc. Ideal entry would sort of be a rally back into this region. Okay, so we'll see if we get that or not. The levels are good. It's all about timing the entries on this, though. Bear sub upper median line parallel. A break above 134 essentially invalidates the short side. So feel free to take a snapshot on that if any of you need it. Avery, does that help? I'm going to take that as a yes, Avery. I appreciate it. Cheers. Sterling yen, please, too, Mike. Absolutely. So sterling yen on the back of the pound, which we covered earlier. Love it. Here's what sterling yen looks like. I don't know what to tell you. This looked like a solid hold to me yesterday, so I was kind of looking for maybe a rally back into here to short it again. Then it broke below. Oof, it's been really contentious of this break of support. You see that range that we highlighted looked like it broke through yesterday, rebounded really hard. Came in this morning, I was like, what? We're breaking it again, rebounded really hard. So, I don't want to get stung by this again. The thing I would be looking for is those really high volume days, and this is something that you see Jamie look at sometimes. My colleagues on Daily FX as well, Christian Kerr will sometimes point this out. But on candles, especially on the longer term hourly candles or the daily candles, where you see spikes of real high volume, you can use this as a gauge of validity, not validity, let me take that back, as a gauge of conviction on the move. If the market spikes into a real crazy high, a new fresh high on very little volume, you're not going to really have that much conviction on that move. But if there's a lot of volume behind it, then it's something you want to pay attention to. So just some food for thought there. But long story short, sterling yen, I'm still looking at the same formation. Nothing's changed. Here's the setup from last week. Oops. Kind of like a wicked break or a wicked false break here. Move higher. Your near-term resistance is up here still, I would say. Actually, let me bring that 618 down. No, we'll leave it. What was that? Tuesday's highs, we'll leave that. So resistance up at 185.32. I had soft support at 83. The bigger play was down here at 82.56 and the 82 handle. But this looks like it's going to be a false break. I don't really like it at this point per se, just because, Avery, I'm kind of like constructive on the euro and kind of bullish yen, since some of the yen crosses look bearish. So I wouldn't be surprised if this thing chops a little bit more sideways here. Or sterling rather, and the yen, both of them. So we'll see if we get some clearance. Keep in mind also this trend line support. This dates back quite a way. 2013, tagged again in 2014, almost went for a run on it early this year. We tagged it in October, and that's just right here. So I would put us at a neutral stance for now. For now, momentum hasn't given you much conviction. It does remain a little bit more on the bearish tone on the intraday charts. You know, you would look like you were going to make a break of the weekly opening range, but you didn't. So I'd still be a little bit more neutral with a slight downside bias on this. Avery says, sterling yen, if daily closes below the 618 fib, does that constitute a break then? Yeah, if it closes below, I'd be a little bit more comfortable, sure. Looking for 83, looking for the 82.50 handle, sure. Because you also have that basic trend line there, right? So if you close below it, that would also be a conviction break there. From a scalp basis, Avery, from a scalp basis, because again, like I just pointed out, that major long-term trend line comes in at 82.96. So actually, no, I wouldn't be too excited on playing that break. That was my problem with it. Oh, by the way, Aussie CAD went AWOL last night. I don't remember if you guys remember this. We'll come back to that in a second. But does that make sense, Avery? If it closes below the 618, it depends where. If you're below that longer term trend line, then I would still be cautious. Or if you're still above that, I'd still be cautious. You want to see it close below this larger, more encompassing trend line. Avery says, okay, great. Thanks, Micah. You're more than welcome. Kyle says, can we take a look at sterling Swiss? Strange pair, I know. Don't usually pay attention to Swiss pairs, but I really like the setup here. Sterling Swiss. Okay, I definitely don't have a scalp for you. Sterling Swiss. Ah, I might. Okay, it hasn't been updated in some time, but we can remedy that. What's the game plan here, Kyle? You trying to get on the long side? Maybe something like that. Let's say for argument's sake, this is where we are. And you just broke below the 50-week and 100-week moving average. Is not going to pay attention to that. Let me see what the other chart looks like. On the near term, I see what you're saying. He says a series of higher lows and higher highs. That does look right. And guys, that's the opening bell right now for U.S. trade. So we do have to wrap things up. But here's what I'd be saying. I like what you're thinking at. I think you'd want to try a move like that from lower down. I don't think this thing is quite done just yet. Let me see if I have any fibs off this region that could offer us some sort of justification for holding along here. That's messy. And one other thing you'd want to check out is just an extension off the high. Ooh, and the 2618's there too. All right, this is actually pretty clean. Watch these levels. Watch these levels. Resistance at 50.87, that lines up perfectly with that moving average there. But more importantly, the downside 52-week lines up with a longer dated 50%, the 2618, and the lower median line parallel a little bit lower. I'd love for this thing to give us a new low before I start trying to press the highs. Kyle, does that make sense? I hope that helps on that. It says, thanks, Michael. You're more than welcome. I think I got all of your questions, guys. Uh, Kyle says, ideal. Thanks. Yeah, you're more than welcome. It's always good to be with you guys here in the morning. So we'll wrap things up here. Again, tomorrow, retail sales out of the United States might have a bigger implication on the dollar crosses, so do watch that heading into next week. All eyes will be on the Fed interest rate decision, which on Thursday, you have the BOJ later in the week as well. Stay nimble into the close of this week, early next week, guys. I don't really want to get too much of an aggressive position on any dollar stances ahead of the FOMC, and that obviously will be our main highlight for the week ahead of the holidays. Till then, guys, we'll wrap things up. We'll be back on Monday for the free public webinar on Daily FX. Tuesday, Wednesday, and Thursdays right back here on SB Trade Desk at 8:30 Eastern. Till then, best of luck trading. Have a great weekend, guys. Cheers.